Hey guys, Susan Blackbeth here, founder and managing partner of Auspicious Owl Group. I am delighted to be bringing you episode 1 in our education series today. I am going to start with a very high view of how dollars flow into the franchise space, right? And we're going to talk about where those dollars come from. And I think this is important because as we get into more detailed topics, just having a general understanding of this term private equity and where their dollars are coming from is really important. So we're going to go again, 50,000 feet. This is a super basic breakdown of sort of the broader capital markets. This is really focused more for my franchise friends or anybody who just wants to take a broad understanding and learning of kind of private capital and how it works and where it comes from. There's a whiteboard involved. Of course there is, because you can't mom-splain something without a whiteboard. So let's talk about the public markets first, right? New York Stock Exchange, NASDAQ, and similar listings. The public, the average Joe and Jane, can buy and sell stocks, bonds, etc. on the daily when the market is open, right? Anytime the market is open, you can buy and sell. Public market, highly liquid, right? And the pricing is literally changing by the second. So super dynamic, but you can get your cash out and you can put it back in very, very easily, right? So those are the public markets. On the other side, we have the private markets, and that's where we're going to spend the majority of our time learning and talking about. Right? So in the private markets, there are asset classes there, just like there are in the public markets, right? When you think about public markets, you would have stocks and bonds. Here we have the equivalents, and I'll dive into this in just a second. But here in the private markets is where we have asset classes like private equity, right? And that is inclusive of venture capital and growth equity and buyouts. It also includes private credit, real estate, infrastructure, secondaries, lots of different asset classes over in the private markets. These are collectively referred to as alts because they are alternative investments to the public marketplace, right? So some of the characteristics over here, though, are that the average Joe and Jane, the retail consumer, cannot buy these asset classes, cannot invest into these asset classes. Now, wouldn't you know, the world is trying to make it tough on me because this is actually in the process of changing as we speak. I'm going to leave that for another day, but we are seeing some market changes where the retail consumer is having more access to the private markets. For sake of this conversation, though, this is sort of an invite-only club if you have a really, really big checkbook, right? We'll talk about who that equals in just a second. But the public generally is not investing here. This is a long-term hold. So remember, in the public markets, we said you can move that money on the daily. When you're making an investment in the private markets or in the asset classes of the private markets, those are typically locked up. That capital's locked up for plus or minus 10 years, right? As a general rule of thumb, it's a longer term hold. Once you make that investment, you shouldn't plan on seeing really much of it back in anything less than 10 years. And then you're also thinking about pricing in the private markets being locked up, right? Until there's some significant change in the investment that demands a price change. That price holds for certainly much, much longer than the public markets, which changes by the second, right? So highly illiquid, right? Long-term hold capital, big, big dollars over here in the private market, and public market, you're working with more retail level dollars or individual consumer level dollars, and it's highly liquid, back and forth every day. Let's flip this board around and go into some more details. You can see this is what I had up in my son's room. And so it's a little bit encouragement for all of us. But where does the capital come from that gets invested into private equity? Let me just use private equity because it's the term that most everybody is probably highly familiar with. But who are the investors? Where do those dollars come from? Well, they come from limited partners, referred to as LPs. Those are the investors in firms like private equity, right? And it's referred to as institutional capital. So who's institutional capital? Pensions, endowments, insurance companies, sovereign wealth groups, right? So when you're thinking pensions, think firefighters and teachers and corporate pension funds. And when you're thinking endowment, think universities, right? Insurance companies have to put those premiums to work somewhere so that they can continue to earn money on their money, right? Some of you might say money on our money, but I'll leave that for another video as well. And then sovereign wealth, right? Sovereign wealth, think government. I'm also going to leave you to do your own research on sovereign wealth because there is some sort of brain block for Susan on sovereign wealth and my ability to learn much about them, right? So those are our investors. That's where the capital comes from. Institutional capital, institutions, universities, pension funds, right, etc. Invest in private equity groups, right? And private equity is considered an asset class, an alternative asset class to equities that are offered on the public market, right? That's the breakdown. So asset classes here, public, stocks or equities, you would have the alternative of private equity, which is inclusive of venture capital, growth equity, buyout funds, right? Then you would have bonds or fixed income on the public side. And on the private side, you would have what we call private credit. You would have REITs, real estate investment trusts that are listed publicly. You would have infrastructures that are listed publicly. And there is an alternative in the private world as well. So there's private real estate funds and there are private infrastructure funds. Again, I'm painting with a very broad brush, trying to give a 50,000 foot view of what these asset classes look like, right? But as an institutional investor, so as a limited partner that invests, again, in private equity, right? So as an institutional LP making an investment in private equity, what I am trying to do is manage a portfolio across both public and private asset classes, right? To manage liquidity. How quickly can I get those dollars in and out and put them to work? I'm trying to manage for risk. So how risky is this particular investment? And I'm trying to manage for return. Am I able to get above market return on this investment? And I'm sure we could get some institutional LPs on Owl's Edge podcast to talk in way more detail because it is certainly much more intricate than what I just described. It's quite amazing to watch. But those are the types of things they're balancing for across their portfolio. And so those are the dollars. I really wanted to talk about the asset classes on the private side so that you can understand how private equity raises their capital. They raise it from these large institutional investors. That's episode 1 on our series. Again, please send me an email to insights@auspiciousowlgroup.com. That's insights@auspiciousowlgroup.com. Y'all know I love positive feedback most, but I'm open to hearing what might be more helpful to you, where you would like me to do a better job of explaining what you might like me to dive into on future episodes from a question standpoint. Insights@auspiciousowlgroup.com. Thanks so much for joining me for episode 1. Have an auspicious day.